Welcome back for another Polygon Matic price prediction analysis, and in this video I will be sharing my next price targets and also give you reasons as to why Matic needs to continue holding above the $0.7114 mark here on the charts. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Matic has lost a key area of support at around the $0.784 mark, which is now acting as a resistance for us to continue gearing up. And you can see that after losing that key area of support, we have been seeing a little bit of a breakdown here on the charts in a move that has also continued to obey the Elliot structures. And I'm terming this breakdown move as the formation of this wave 4. And at the time of this recording, the next key area of support that we are holding above is the key area of support at around the $0.7114 mark. And here on the charts, we have also continued to hold above our bullish trend line here on the charts, where you can see that I have this trend line that we have been holding above. And as long as we continue holding above it, there are high chances that Matic is going to give us another pump to the upper side in a move that could give us a break above the $1 mark. And to give you my Elliot wave structures, you can see that after seeing the massive breakdown on the 10th of June, in a breakdown move that gave us a low at around the $0.52 mark, we have been seeing a very nice recovery to the upside, where we first peaked in this 1-2 setup here on the charts. And after seeing the 1-2 setup, we continued gearing up, still obeying the Elliot wave structures, where we have now peaked in the formation of this wave 1, seen a breakdown move in the formation of this wave 2, we have seen another massive pump in the formation of that wave 3, fully maximizing minimum target areas that I gave you, basing it on the trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, having my minimum target area at the fib level 1.618, and that is at around the $0.8581 mark, which is an area that we have now fully maximized, peaked in the formation of that wave 3, and started our breakdown move in the formation of this wave 4, which is still playing out at the time of this recording. And using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, I got a minimum target area for the second wave, that is for the fourth wave, between the fib level 0.382 and the fib level 0.5. And you can see that is an area that we have now fully maximized. And I'm expecting that there are high chances that we now have a low in place for the fourth wave, and we can see a reaction of this target area and start gearing up impulsively in the formation of this wave 5. But in case further breakdown continues here on the charts, then we have to extend our target area for the fourth wave back to the fib level 0.618, and that is at around the $0.7148 mark. And that is the minimum that we can expect Matic, that is the maximum that you can expect Matic to do in the formation of that wave 4 in case further breakdown continues. So I have now extended my target area back to the fib level 0.7618 so that we can accommodate any further breakdown here on the charts. And soon I'm expecting Matic to give us the low for the fourth wave and start gearing up in the formation of that wave 5, and giving you minimum target areas for the fifth wave by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3, I get a minimum target area at the fib level 0.618, and that is at around the $0.9857 mark. And that is the minimum that you can expect that wave 3 to the upper side to do. And I'm saying that we need to continue holding above the $0.7114 mark, since that is the wave 1 high for this Elliot wave structure. And according to the Elliot wave guidelines, a fourth wave should not get into the wave 1 territory. So for the breakdown here on the charts needs to continue holding above the wave 1 high. so that we cannot get that invalidation of our Elliott wave structure here on the charts. So that is what I'm keeping my eyes on the short term here on the Matic chart. And if I also zoom out on the charts to give you my long-term price prediction analysis, you can see that last year in June we saw our lows at around the $0.32 mark. Then we started gearing up impulsively, where we picked in a 5-wave move to the upside, having the wave 5 giving us a peak at around the $1.3 mark and completing the formation of these larger Elliott wave count 1. Then we started a breakdown move in the formation of a larger Elliott wave count 2 into the minimum retracement areas highlighted here on the charts using this yellow target area, which is an area that we have now fully maximized, and there are high chances that we have a low in place for the second wave, and soon Matic can start gearing up impulsively in the formation of this wave 3. And the first confirmation that the low is in and the start of an impulse has now started is a complete 5-wave structure here on the charts, followed by an ABC corrective structure and a break above significant highs. The moment we see such a movement on the charts, then that is enough confirmation that the start of that wave 3 has now started, where I'm expecting Matic to give us a break above the $2 mark. So that is what I'm keeping my eyes on here on the Matic chart on the short term and also on the long term. Also taking a look at the indicators on the RSI, we are trading at around the 37 mark. On the MACD, we have been able to print a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I will be keeping you updated.